What's up, Corey? Just want to go through a recap of today's trading day. Um, I was trading oil, gas, natural gold, um, and the overall Nasdaq. So I trade major ETFs, such as like DWT, JNUG, uh, DGAS, SQQ, TQQ, um, and then I also got into like the biotech sector too. So I trade SOXS and LABD. And I've had a lot of success with these over the past few months um, because it allows me to short without finding shares to short, right? I just do the inverse on these ETFs. And so at any point, I can always either bet that the market's going to go down or up. And just based off that simple concept, um, it allows you to take advantage of many opportunities. So that's why I do it. So let's just get through this. As you can see on my screen, we have DWT. We're looking at DWT, and what did it do today? So I have a bunch of EMA and SMA lines on my graph, as well as the MACD, and I have volume. So what do I look for? What's the psychology while I'm trading, and what am I looking for? So I always look for a strong pullback. I'm a dip buyer. I would classify myself as least like a dip buyer or a breakout. Those are the two major patterns that I look for when trading because they have the best odds. The reason why dip buying is so great and has such good probabilities in terms of winning is because just think about it as something that's overvalued or undervalued, right? So if a stock is rallying and it pulls back to, say, a strong EMA or SMA, what really the SMA or the EMA does is it indicates the price at that given moment, right? What a SMA or EMA is an average. It's a moving average, right? And what does that really mean? An average is out of a certain amount of points, right? So it was 50 or 200 SMA. For every bar that's on the graph for that time frame, it averages it out for that amount. So say 50, right? 50 EMA or SMA is actually for every 50 bars, it averages the price out on that line. So if you really think about it, the SMA or EMA is really the true price of the stock, right? Or true price of what the ETF is doing. Because of that, I always look for a nice pullback to that area because now I know I'm getting a good deal. If it breaks that level, then that means there's a lot of volatility going on. There's a lot of momentum behind it in order to break that. And usually what happens is if it does break that key level, it'll do a retest to that level. And then what you want to do at that point is either reject it or really observe what's going to further push the stock down or is going to act as a really strong support. So with that being said, that's why I look for those areas. And SMA and EMAs are always really good. What I liked here in this example on DWT was a nice pullback, right, to this area. And let's just highlight this area so you guys can see what I said. So it did a break here, right? It did a nice pullback here. And what happened was the price broke actually this 50 EMA. So I was looking for a nice bounce here, but as you can notice on the MACD, it was pushing down. So this area could not support that momentum, and it broke through this level. And next buy was down here, right? So I actually bought in this area because a 200 is very strong, as you can see here in the past, right? Anytime it really comes to the 200, it gets rejected or it acts as a really nice strong support. So noticing that, I actually purchased, and we had a nice little run. We had a nice little run here from there to there. It was about 3% or 2.5%, right? But then, as I noticed, it got kind of rejected by this 50, right? And we found like further downside on this DWT, which is actually means that oil went up. And we can observe that on the future /CL, which is for crude oil, and this is the future. So you can understand what's happening with the price, because all these ETFs are based off of, the majority of them are based off of some kind of future. So you can, if you could track what futures doing, you would actually understand what the ETF is going to do. So with that being said, right here is where oil actually went up. And because oil went up, DWT went down. So that's why I love ETFs, because the inverse, and you can much risk of it. Finding a broker that has shares to short for a stock, right? It's very troublesome, as well as a lot of risk involved. So, if you see oil going up, you just buy the inverse, right? Or you buy the actual ETF, UWT. If oil is going down, you just buy the inverse. So it's that simple. And as you can see, that was a good amount of profit, 2.5%. When you're trading with a decent amount of size, it's good profit. But you could do this day in and day out. I've seen and I've tracked major ETFs for about 10 months, 11 months now, and had decent success with it. So with that being said, hopefully I help somebody. Take it easy.